Broadcasting from the commodity capital of the world, Zurich, Switzerland, this is Insider's Guide to Energy.
This edition to Insider's Guide to Energy is brought to you by Fidectis. Go to www.fidectis.com for more information.
Welcome to Insider's Guide to Energy. I'm your host, Chris Sass, and this week we're going to give you a taste of our data science mini-series that we're in the process of doing. You're going to find the whole podcast coming out shortly, and this is just to give you a taste. So we brought with us today Niclas Brok, and Selena and I are going to ask him some questions. Niclas, welcome to the program.
Thank you, and thank you for having me.
Hi, Niclas.
We're super excited to have you here. You're a part of a startup that is called green.ai. Maybe it makes sense to start out by what is green.ai and what are you guys doing?
Yes, so green.ai, we are a university spin-out, I would say. So we started out for half a year at an incubator at our local technical university in just outside of Copenhagen, where we did some deep dives into how we can do better forecasting of power prices. And then it sort of developed from there. And then in the end, we decided, okay, this looks really promising. Let's try to do some power trading ourselves to see how well we can actually do in the power markets. That was.
So it started as a research project, is what I think you told us, and
Yes.
Now you want to get into power trading. How does that happen? What kind of research were you doing that made you think that you are going to go kill it in the power markets?
So I have a PhD in statistics, I would say, and my research was primarily focused around doing flexibility modeling of power consumption. So in the future, it will be quite important how power consumers can shift their power demand in time so they can accommodate the penetration of more renewable energy sources. But an important thing for this to happen is that they need an incentive, and this incentive has to be some economical criteria, and hence it was important to have a forecast of what the power prices will be in the future in order for these consumers we looked at to react on changing power prices, changing penetrations of renewables. And then I did my, the usual literature study of how well does the model work in the academia, and I was quite unhappy with at least how the models were working for our region, Northern Europe. And then I started to, let's try to do something better. And that was like the origin of the idea. And then, you develop from there, something works, something doesn't. And
Interesting. So you kind of just jumped into the energy market without too much knowledge before, I would imagine.
Yeah, basically no prior knowledge about power markets at all. Just a lot of knowledge about how data works.
And how forecasting could work.
Oh yeah,
I was wondering, how are you connected to the exchange? First, what exchange are you trading on, and how are you connected? Are you connected directly, or is there some market access tool between you and the exchange? How does that work, technically speaking?
So right now we had a seat at the table with Nord Pool, and we just have a direct trading license, a trading access with the exchange. So we have a direct access to the exchange. And in theory, we use Nord Pool, but in theory, it's a shared market with Apex. It's another big power exchange in Europe, and in theory, there's very little difference. Might be some slightly different in trading fees, but in theory, they're quite similar.
Okay. So let's talk about what trading do you do? I imagine you're on the intraday market and trading products there, or what is it that you're trading?
So we are trading two different things right now. We're trading the interchange between the day-ahead auctions to the intraday market. Those two mechanisms, there's an interesting spread, I would say, that you can try to predict and take advantage of if you're into the data. And then we also trade something called volatility in the intraday market. So we have a way of describing the spread the market is offering right now. Is that efficient, or should it be wider or narrower? And there we have an adaptive algorithm that takes in a lot of meteorological forecasts like wind and solar production, and then translate that into our way of understanding how the prices should fluctuate in time in the intraday market.
And what sent you off not being an expert on the energy market to get into this, to realize there was something you could arbitrage, or there were some differences to go chase? What keyed you into this problem statement?
I think in Denmark, for some reason, we have maybe a short tradition, but we have a tradition of being really good at power trading. So there was just this rumor in academia that there was some companies in Denmark making fortunes, big lot of money in this industry, and we thought that, okay, maybe this is the best game to play if we're really good at predicting this forecast. There's also some physics involved. It's just traditional equity markets. It's actually some physics involved from these transmission lines connecting all these different price zones in Europe. So we felt like this combines this and seemingly very interesting business opportunity, because there are existing companies making a big lot of money, and then it also combines these data methods where you can say there are some physics driving the price, and this is something we like to do when we are building models. And there is an underlying phenomena that describes how prices are formed.
And then what kind of data does it take to do these kind of things? So I guess that, you heard somebody was making some money. Sounds good, and I think everybody would like that. But you had to find data to go figure out where this is. So where does your data come from, and what kind of data is it?
So we gather data from a wide source of different things. So for once, we have the exchange data. This is primarily price data, spot prices, intraday prices. From there, you can also get some of the transmission data. What's the capacity from Denmark to Norway, from Denmark to Sweden, from Denmark to Germany? And how has the market planned the power flows given these different capacities, constraining how much power that can flow in between areas or countries. And then, of course, what's also getting increasingly more important is how wind and solar production is fluctuating. And this is something we acknowledge that this is a very, very difficult thing to forecast. So this is something we purchase from a data vendor.
So you said it before. I hear the transmission, the physical aspect is something that you consider or you take into account with your modeling. How exactly does that work? Because of course we can always think of equity models. You just said it, forecasting prices, but the physical side of energy is something that is very unique, I would say, in this market. So how does that work for you? How do you price this in?
So basically, let's say that we have two neighboring countries. It could be Denmark and Norway. Then the only way that the power prices in Denmark and Norway could diverge from each other is if the physical transmission line carrying power from Denmark to Norway is running at max capacity. So the only way the power price in Norway should be higher compared to the power price in Denmark is if Denmark is exporting the max capacity from Denmark to Norway. Then there are some small technicalities in Scandinavia, for example, where this is not always true, but in general, this is where transmission lines are crucial in the price formation across power markets. And also just the fact that this day-ahead auction is an optimization model which optimizes something called social welfare. And the main component there for forming these prices is how transmission lines have different capacities of how much power that can flow through them.
How much data are we talking when we talk about this? So you got the transmission line data, you get your weather data, you just talked about some other bits and pieces. So how much are you working on at a given moment?
It's an very rapidly increasing amount of data. So especially since we have something called the Danish Meteorological Institute in Denmark, and they just recently open sourced all their short-term forecast of wind power, wind direction, the cloud formation, and temperatures. And this is something they have open source. So basically now we can, based on the geographical coordinates in entire Europe, we can get pretty accurate forecasts of wind speed, wind direction, solar production, and solar radiation.
For
and
Denmark or
temperatures
for
as
the
well.
entire northern region?
For the entire northern region, and then also they have a fine square
Yep.
on a map in which they are, according to them, pretty good at making forecasts of these meteorological values, which is then driving, which you can say you can translate to some energy quantity, wind power production, solar production, power
With
demand.
that much data, does that mean that you are doing something with the data before you start using it? Are you using it kind of sequentially? Or are you going and just using the raw data? What are you doing with it? 'Cause it's got to be a fair amount of data that you're talking about. What's the magnitude of the data you're looking at? Maybe you can give us an idea of the magnitude.
I honestly have no idea, but it's an increasingly larger number on the expense filing in our monthly bill with Amazon Web Services. So yeah, but in general, we try to understand how these meteorological phenomena, they impose some transmission problems. For example, wind power generation, they might infer some local transmission problems which are not directly perhaps reflected in the power prices. And then we try to stay on top of things and try to forecast when these weather-driven phenomena, they give rise to what should be other prices in the power market. Yeah. So try to be as true as possible with data, but of course, what's important with data is also to of course clean the data so we know what we have as well-defined inputs, and also just make sure that we have no ill-posed data, in the sense that there might be some errors in the data that was available during some time interval with EMI. So a lot of cleaning up the data, make sure that it's trustworthy and credible. That's a big part of it as well.
That's the input going into your model, and I really like to talk about your model when we go along. But before that, I would like to ask you how you're doing the trading. So you have the model, you have the forecasting, but do you have some automatic execution? So does something happen automatically when we think about algo trading, or is it always a manual trading, still taking into account the inputs coming from your models, from your forecasting?
So typically it will be that in the day ahead auction, we just have a logical talk every day. So the day ahead auction for Europe, it closes every day around 12 for the bids you can submit. And then we just have the daily routine that we're just talking about the recommendations from our algorithm to say, does it really make sense? We're still new. We have been trading for 7 months by now, I guess. So we still want to make sure that what we are also bidding to the market is meaningful, to also respect it as a physical system that has a pretty important role in society. And then from there on, when what's called the intraday market opens, and you can trade the same contracts again in a continuous market, there we have an actual algorithm running and buying and selling, depending on the different inputs, the signals that are coming from our algorithm.
Which you developed
We're using
yourselves.
Yes, and up there we use, so for this algo trading, we're also using a third party called PowerBot to interface our connectivity to the market, because that's a really software heavy thing to be good at.
And
Yeah.
then I guess, follow up, our producer was asking me about in the chat, he was asking about the granularity of your model. You talked about regional transmission. How granular are you going? Are you going per country? Are you going per region? How far down are you going?
So in Europe, we have this called a zonal pricing scheme. So we are going down on the individual price zones. So So in Denmark, we have DK1 and DK2, Western Denmark and Eastern Denmark, and then we're also treating them as two individual zones. And then similarly for Sweden, they have 4 zones. We're also treating them as 4 zones, and Norway has 5 and so forth. But then in Germany, for example, you have one price zone, where we're actually treating Germany as according to the 4 TSOs that you have there. So it depends on both, I guess, on how we also feel that the price zone is also reflected sufficiently in how the transmission system also should divide the zone.
But your goal is just to work with the data that's easily available, or do you have an objective to span this out to as much territory as possible? What's the goal?
So the goal is to
All price zones, or
all price zones in Europe, and then also similarly, we have some ideas of how we can extend these concepts for the US markets as well.
and then you mentioned to me, and I think I briefly caught that in the earlier part of the interview, that you guys started this. It was started as spin out from the university. I think some of your ideas were you might be doing this for other people, but at the end of the day, you guys are doing this for yourself, your company, right? You're not doing this for trading for others. This is for the company. And then how well do you need to outperform the market to make this make sense? Like how you mentioned that your Amazon fees are going up, so there was some sensitivity to your margins from what I could tell. But what's winning for you? What kind of outperformance or what kind of better than the market are you looking for?
So we have this approach. Maybe it's a bad approach, but our approach is to not focus on what other companies are doing, but just focus on building things that we think are the optimal way of doing this. These trading related activities, and then we just execute from there. So we are highly profitable right now, and but I think that's a general feature in the power trading industry, that a lot of companies are highly profitable. So yeah, but we focus on ourselves and are not blinded about the insane profits that the rest of the industry is earning right now.
But is this an arbitrage opportunity that you see as a short-term window? Because if you're looking at facilities and you're giving the secret sauce out, we have other people in energy trading that listen to our podcast. Aren't others, even though you're not concerned, going to do the same thing, and then the arbitrage opportunity becomes less as more people follow the same suit?
I think in theory, yes, that within the next 5 years, more smart people will join this industry, and the available arbitrage, as you call it, will diminish in time. So I think right now there is a golden window for people really good at data science and coding. They have a golden opportunity to hit it here in the power markets.
Let's dive right in. Let's talk about the model then. So you're coming from academia, from forecasting, mathematical optimization. That's something that carried over to what you're doing right now. Can you start just from the outside, maybe high level, explain what models or what model you are using?
Yeah. So how should I describe this model? So the inputs here are, you can say, weather-driven phenomena, wind speeds, wind production, power demand, and of course its forecasted values of the future. These gives rise to, you can say, some uncertainty of these forecasts, and basically the change of forecast is also gonna drive how the power prices are behaving. And then we have a methodology which is really good at taking these uncertainties of the forecast and propagate that through, you can say, our model layer, and then quantify what is then the distribution of the expected future power prices. And then we run these, you could say, forecast uncertainty, this forecast model with some uncertainty through our model layer. We get a lot of really realistic scenarios of how power prices should behave. And given this complex outcome space, we can then run a sort of a portfolio optimization, which you know from portfolio optimization in finance, which then optimizes your exposure to the market in terms of being risk optimal, but also in terms of, on average, ensuring that we have a positive rate of return.
And this happens sequentially. How? Because of course it builds up on the results from before. How long
Yes.
does that take? Respectively, how often does your model run? Does that happen every day before the day ahead auction, and then continuously, because of course the continuous trading for the intraday market then unfolds, or what is the frequency? How does that work? Because I mean that's a lot of data that you have to work through.
Yeah, so our model is recalibrated every 10 to 20th second. It learns and consumes new data. And then, so it's a bit different. So the day at auction, it's a bit, you can say a longer planning horizon where you could maybe have half an hour to 1 hour to make sure you have understood the recommendations and the output correctly. And then when we go to the intraday market, it just churns along and recalibrates every 10 to 20 second. Then we have there also the cloud infrastructure becomes quite important. And then we have we think at least some very modern infrastructure in how we process data and then have a continuous feed of how we also update model and recalibrate model and so forth.
And when you say your model learns, is that something that also happens in the long run, not just over the course of the day, over the course of one trading period, but do you expect your model to get better over months? Do you have some target function that you have included there, or do you go back and do back testing with the now more developed model to see what could have happened in the past? How does this aspect of learning come into play?
So we have, you can say, more long-term based models, which also models these how transmission reflected issues, how does the in general propagate to inefficient pricing of power. Those are more like macro models, you can say, from if you're from a financial background. And then we also have these more local models which calibrates like in real time with respect to the more local data. And then how do we quantify if everything is running as expected? So of course we have done an insane amount of backtesting before we started trading, and there we have this metric of what is during the month. We have an expected return profile, and then we are every day continuously monitoring. Are we on track with the expected returns that we thought of before the month began? And then of
What
course
kind of
there's a lot
safeties do you put in place so that you don't go belly up tomorrow when there's a unnatural event that takes place? What did you do to protect yourselves?
So I think just by the nature of trading on the short-term markets, there is some upper bound on the amount of money you could lose. So it's not given that if you are trading gas futures, so I don't know, then suddenly something happens somewhere in Europe, which suddenly makes the price go through the roof. And then if you have a short position, then you are in problems, right? In trouble. So just by the nature of the short-term markets, you have to some extent an upper bound of the amount of cash you can lose. And then we also just have daily margin positions, which we have a risk policy internally in the company, which defines the maximum position sizes and so forth that we can actually are allowed to, or the algorithms are allowed to take, or
And then
that we are allowed to trade in the auction.
as you expand this out, you mentioned earlier maybe the US market or what your aspirational goals are for other markets. How does that change your models and the inputs? Because the markets aren't exactly the same, right? So what considerations do you have to take when you move into, let's say, North America or somewhere else?
Yeah. So in Europe, I think we have found a pretty good recipe in how everything should work. In the individual price zones that we are now slowly starting to penetrate and start trading within. And then in the US, they have this nodal pricing scheme, which is even more physically based in how prices are formed. So I actually think that makes it even more suitable for the way we model and optimize things. The US way of doing power prices. because it's even closer to how the transmission system actually operates compared to how power markets function in Europe.
So the other thing that comes to mind is you mentioned cloud services. What kind of infrastructure do you need to run this kind of configuration? What kind of compute are you talking, and what kind of storage and access and things like that do you need to make this perform?
So we have this, I think, typical for a tech startup, this Amazon Web Services setup where we use their services for our data storage. And from there on, we're using something, maybe this get a bit techy now, but we use something called, what's it called? It's called serverless cloud computing. So we are actually running in a way where we don't have any dedicated servers ourselves, but Amazon is trying to build up this managed solution where you can build your cloud infrastructure in a serverless way. So we don't have to keep track of if our servers are they up and running all the time. So to reboot something, are we sure that we are dimensioning everything according to the computational power we need? So we just have this serverless architecture right now where we can just use all the computational capabilities that we want on demand, you can say. So it's both cost efficient, and you can say the learning curve of doing this is incredibly steep in the beginning, but now we are starting to harvest the fruit of this serverless infrastructure in our day-to-day way of doing things.
When you are growing, not just in data that you're working on, but also in markets that you trade on, what do you think are the challenges? What is going to be difficult from the point of infrastructure to be able to scale up like that? Because you will have to have more models, of course, working more markets. The renewable data, what you also already talked about, more and more getting important, get more and more renewable, like wind and solar, all the physical aspect, temperature and wind forecasts. What infrastructure changes or challenges do you see?
So we aspire to be a software company and not a trading company. And by that, it also, so every time we are attacking a new model, we always tell ourselves, does this need a lot of man hours in the maintenance of the model, or can this run automatically in our current pipeline of how we do our existing models? So we try to be very software centric, and we are really ramping up and also make sure that our software team is really potent and capable of implementing and automating a lot of the software stuff in our pipeline. Yeah. So
You
with that,
mentioned a team. How big a team do you all have?
so we just signed our 6th employee 2 days ago. Yeah, a new software engineer for the team.
I'd like to get back to something that you just said. You said you see yourselves as a software company and not a trading company. Maybe a software company that happens to be in trading right now because the application of your models just works out well. Do you see any other opportunity in the energy realm, maybe using everything that you learned in the last months and years and using your data science knowledge?
So I think, of course, when you can trade with no portfolio, no physical assets, no actual power consumers, then of course we can also start to build on top of this interesting products, which a balance responsible with a lot of power consumers in Denmark might be interesting in purchasing in order to minimize their exposure to power imbalances. So typically these power imbalances might infer a substantial risk if you are a small company operating some power supplying to consumers.
So
So
that
we see
leads
that
me
as
to
an
like
oh sorry.
microgrids, right? Or behind the meter type stuff. So are you anticipating maybe a solution offering where you can go down to, you were talking about individual companies then that would see that risk and help them mitigate against their local
Yes,
infrastructure perhaps and
that's
transmission?
that's on our you can say vision within plus 3 years at least, to also start to offer a product range where we can also bundle our software and offer products for different types of consumers or different type of assets with different profiles. If for example, in Denmark, a wind turbine located on the west coast in western Denmark typically has a production profile throughout the year, while a wind turbine in eastern Denmark has a different profile. So we can be, at least in theory, using our software in this regards to also offer very specific and optimized and tailored solutions for different types of assets and different types of power consumers.
And then in your current model, what you're taking advantage of where the market is today, what's the risk, or what do you perceive risk of regulation coming in and knocking out the good days that you're having right now?
So that's always an existential risk if you are running a purely trading driven company. But I think at least within the next 3 to 5 years that this will be a non-existent risk, is our view at least. But of course, this is something we are actually also, just during the last half year, there was a lot of talk about non-normal profits of related companies in our industry. So that's of course is posing some sort of regulatory risk that at some point the power markets are gonna be impossible to be at for purely trading and software driven companies.
Talking about risk, I thought of another pitfall that might be specific to your position as a trading company, trading house, because you don't have the possibility of physical delivery. So if you have an open position and the market goes some way you didn't expect, for you don't have the possibility to switch on and off your power plant. You just don't have one. So risk management, of course, is very important for you. Maybe you can shed some more light on that.
Yeah, that's the most important thing I would say in our day-to-day operation is really mitigating risks in real time as they happen. But so I guess the comment to that is just that on average, we are pretty sure that we make money. So we also acknowledge that some days we lose money, but most days we make more money than we lose. And as long as we do that, we're in a really good place. So of course, every time you want to earn a dollar or a euro, you also have to put some capital at risk. And that's just the nature of being a trading-based company.
Understand that you hopefully your wins are greater than your losses. Otherwise, it's not a great business model. That makes some sense to me. How complex was this to do, and how much time you spent in engineering? You said you did quite an exhaustive bit of testing to put all these pieces together or write code. How long did it take you to build this?
I think that, so of course, to begin with, we were primarily trading in Denmark, and from there we have expanded to the neighboring countries around Denmark. And initially we had, you could say, one model that worked, then we had two models that worked, and then we expanded from there. So the initial model was, it took 2 to 3 months from the initial ideas to we had a proven concept. And then the tricky part was actually when we come as an outsider into this industry, it's quite tricky to understand all the wording that's connected to the industry. So also which bank should be used in order to get our trading license. Then you also need to have local arrangement with the different TSOs in Denmark, Sweden, Germany, and wherever. So there was a lot of knowledge that we didn't have because we didn't have any experience with the industry. So that was the more tricky part, was actually getting access and being allowed to trade than actually coming up with a potent trading strategy.
And is your software then, you talked about being additive. How much is it transforming along the way? How much is it changing and learning, right? So I get that you started with one model and you got another model and you get more geography, but what about the complexity of what you're doing or your ability? Do you need to be complex, or you kind of have a keep it simple model?
So we take the approach that our model should be understandable from either a power market perspective or a power system perspective. So we shouldn't just be gaming something, be training something just purely based on some weather phenomena that we're observing. Then we have right now we have the criteria that we should be able to explain either via some power market fundamentals or based on some transmission fundamentals or connection of the two ideally, why that we see this, that this data feature is giving these price signals. So we always want to have, you could say, a reason to why we're actually executing the way we are.
What I was wondering is, you said your vision is developing more software, finding other problems that you can solve with your software. You also want to go to Apex and trade on other geographic markets. What else there on the horizon that you see, maybe but a broader perspective for the energy market, for the market that you are working, you're trading on? What is happening the next years? What developments are you expecting?
I think it's tricky to say. I think we will have a lot more renewables, hopefully penetrating our power systems. That will give increased amount of volatility to the power markets, and hopefully still create really lucrative business opportunities for software companies that are really good at explaining these variations in prices. And then we also, I think it's also going to be interesting to see how these Power to X facilities, what's their role going to be in power markets, and also how will batteries also be a part of this renewable transition that we are currently undergoing
And have you
in the power
started
systems.
doing work with batteries right now in storage? Is there enough storage to build into your models yet that you're considering?
No, we are starting to see some slight indications of. So we have a lot of. We have, to some extent, we have in Denmark we have a lot of private houses which has PV panels on the roofs, and then they have this behind the meter settlements where they can do their net power production and consumption when they settle with the TS or the DSOs. And there we can start to see that, okay, when the sun is shining, actually we sometimes have a some weird demand forecast which doesn't really capture this behind the meter dynamics. And there was actually recently there was a good case in the Netherlands where they also have something similar with these PV panels, but then suddenly there was a snowstorm crossing the Netherlands, and then suddenly the PV panels was covered in snow. And then this had the opposite effect of these demand forecasts. So because the observations of the power demand were somehow slightly biased during the day when the sun was shining, and then when at this specific time of the day the sun was shining, but because there was just a snowstorm passing by which has put snow on top of the PV panels, the models were completely off. And then I think the power balance in the Netherlands were pretty bad for, I think, 4 to 6 hours or something, where they hit some pretty insane power prices.
So other than trading in making money for the company or the software that you're developing, what do the industry insiders think of what you're doing? Are you getting feedback from others that value what you're doing, or find that as just opportunistic? Or what's the feedback you receive from your peers in the market?
So I think the peers in this market are all pretty secretive. So it's difficult
You
to.
don't know.
We mostly don't know. There are some similar startup type of software companies which do something similar to what we do, and we have monthly coffee meetings with you can say a similar software company here in Copenhagen. But then also because most of these power trading companies in Denmark, they're located in Aarhus or Aalborg, and they're 2 to 4 hours away from Copenhagen. So also a bit tricky to get to know these people when you're so far physically apart.
I don't know. I saw you in the room with some of them, so
Oh, yeah.
I've seen you in a host with them. I know you see them once in a while.
One question from me: on your learning journey, what did you surprise, or what did surprise you the most the last months going into this market?
I think it's actually, it would be how should I say it? How ancient the infrastructure behind the power market actually is. So, for example, for having a trading license in Germany, it's I mean, I think we have there has to be built some pretty critical software infrastructure in order to accommodate this rapid power system that will be coming when we have a lot more renewable energy production in our power systems. And I just feel like that it's there's a lot of legacy systems that we're building on top of right now, which I don't know, just intuitively would give some challenges in the future, I would say.
So let's try to bring this together. We've been on a pretty long journey on this conversation, right? We started with how you started the company, talked a little bit about the kind of data and the amounts of data you bring in and what you're doing with it and trading it. I guess, I think the last question that was just asked is, what have you learned? I think that's interesting. How is your crystal ball? What's your prediction of where this goes and what you guys can do next?
I think we will be within the next 2 years. We will be trading in most of the liberal power markets in the world: Europe, US, Canada, Australia, New Zealand, and then we'll be expanding from there.
And still internally, those customer products that you were talking about, where you were kind of microgrids and things like that, that's still years out. That's longer term for you guys.
We are slowly starting to initiate some projects here locally in Denmark, but I think there's some development we have to do in order to accommodate this in every country in the world. But at least for Denmark, we have I think within the next year we will start to onboard the first physical assets and power consumers.
And then we got your bio, but you're a team of 6. What is a collective skill set that people would need if they want to go print money too?
So right now we are 3 PhDs, myself in statistics, and then we have 2 brilliant guys who has a background in game theory. They did some fancy modeling of how predator-prey models of fish, how that behaves, and we thought of, okay, maybe we can do something similar with power markets. And then we have 2 brilliant software engineers who are help building and maintaining our software pipeline. And then our 6th guy is also pretty important, I would say. So when we come from academia or universities, we're pretty naive into how you should actually operate a business. So we also have a business guy who is quite important in also just speaking the correct language of banks and exchanges. When you have an engineering background, you don't really speak the language of a bank, I would say. It's so he's really good at talking to the different stakeholders and making sure everything runs smoothly, so we tech people can just execute.
That sounds like a good setup you have.
Well, Niclas, this has been a joy for me. It's been a lot of fun. I know when you first told me about what you did, I was looking forward to bringing you on the podcast and sharing you with the audience and the vision that you described. I want to thank you for being so transparent of what you guys are up to. This is fun. I hope our audience is enjoying it as well. Selena, any final thoughts?
Thank you so much. Well, it's really interesting to talk to startups like you, because you're coming from the outside, I would say, and also starting and trying to transform the energy business that we know so well. So thank you so much, for giving us that insight.
Yeah, likewise. Always fun to chat about data and data science.
Awesome. For our audience, you got a taste of what we're going to be doing with our data science series. If you're into energy and data science and want to figure out how folks in energy are using data science, don't forget to tune in. The mini-series is kicking off in a matter of weeks. You're going to want to find it. Tune into Insider's Guide. Go to our website and you'll find more. And if you like it, subscribe, follow, share, and tell your friends about us. We'll talk to you again next time. Bye-bye.